Should we buy or sell Singapore? First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So Singapore is under the broader category that I call South Asia. Singapore has 0.34% from the 52-week low and the minus 15% pullback. Okay, so let's jump into the charts. Weekly data points, big picture, and we do see some major, big, huge, multi-year time cycle. Rise, decline, rise, decline. So the major time cycles suggest that there could be a major rising phase around the corner. Maybe. If we look at the current price action, you could argue that we are at horizontal support. At least we are at a level that could be used as horizontal support by the bulls. Whether it works or not is of course very dependent on the bulls actually buying Singapore at these levels. That's a very key thing about these kinds of technical levels. They work if a certain party acts. Obviously, the bears, the short sellers, they want to see a vicious break of these horizontal support levels because they fully understand that that will be interpreted very negatively by the market. So yeah, we have seen some selling, but now we are at a level that could be interesting from a speculatively bullish perspective. Here are the daily data points, and here we have a bit more nuanced perspective on these horizontal support levels. Okay, so when we look here at the weekly data points, and here we look at the RSI. So throughout the history of this ETF, it is rare for us to become even more oversold here on the weekly RSI. There have been a few times, but in the vast majority of the history of this ETF, we tend to see rallies at these levels. When we look at the 20-week moving average, most of the time we do see some mean reversion to the upside from these levels, but there have been times where we have gone lower. So yeah, there is definitely the potentiality for more downside, but most of the time these current readings attract bulls. Looking at the daily data points, extremely low level here on the daily RSI, an RSI of 19. That is definitively in the oversold category. Distance from the 20, 50, 100, and also the 200-day moving average is at a low level that most of the time attract bulls, with the caveat that there have been times where the bears have been even more ferocious. Looking at accumulation distribution, so let's zoom in a bit here. So we see here that there's been a very steep sell-off, but when you look here at accumulation distribution, we have kind of flatlined. So there are buyers here. That's interesting. It's not, so someone is buying. Okay, but let's explore further. When we look at the seasonality over the last 5 years, January is a very strong month. The last 10 years, yeah, January is a decent month, closes higher 60% of the time. And then the last 20 years. So 55% of the time, January closes higher than it opened, an average 0.8% gain. February is very 50-50. Then March and April are very strong, especially April. So the seasonality is more bullish than bearish, but it's not like roaringly bullish. Here we have Finviz. We have just sliced through these trend lines. Minus 3.26% year-to-date performance. That's not good. But from a contrarian perspective, that could be interpreted as a potential interesting place to put money, because it's very important to be aware that especially like mutual funds and certain other types of funds, they do not have the opportunity to short. They literally are not allowed to do that, so they must be long. And those who are forced to be long, they just then have to decide, okay, do I want to have my money on the S&P 500, which is at, a pretty high level at this point, or maybe do I want to see whether there's some opportunities elsewhere? From a price earnings perspective, the PE is a bit lower on Singapore, 10%. So the price earnings is 10% higher in America. What is especially interesting here, I think, as far as mutual funds goes and the like, is the dividend. So 2.65% yield here for Singapore, and that is much, much higher than the 1.22% you get here from America. Looking here at the holdings, so Singapore to the left, America to the right. Then we go a bit further down. Finance is huge though, so a whopping 57%. Here is finance in Singapore. That is very tilted towards finance. Retail trade is the next one. America is far more. There's far more. Well, it depends on how you view it, because tech services is 21%, and then electronic technology is 16%. So the total here, tech-wise, is actually quite significant. So America is actually quite weighted towards tech. Market cap breakdown, a bit more, diversity here in Singapore. Okay, so if I were to sum up a bit here, okay, let's quickly look a bit at the correlations. So long term, 22% with the S&P 500, 44% with Germany, and then 33% with Japan, and minus 13-ish% with the dollar index. Short term, minus 5% with the S&P 500, 52% with Germany, 22% with Japan, and minus 35% with the dollar index. Okay, to sum up, so this one is a bit tricky because from a technical perspective, we are at a level that, statistically speaking, most of the time it at least results in a mean reversion, to the upside, because we are at an extremely low level, so very, 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 very much oversold. The seasonality is not like roaringly bullish, but it's not like really bearish either. I think I would lean bullish here. Just a little bit. So yes, I feel more bullish than bearish on Singapore.